We got some good stuff. Yeah, got some really good stuff. I think you guys are going to be pleased. Jamie, how's it going?
It's going well, Andy. It's going well. A very interesting day that we had unfold in the market today, and Andy gave me a peek at the content that he was going to, that he is going to present to you guys. And boy, it's pretty eye-opening because once again, it marches to the beat of the drum that goes something like, whatever you perceive to be the way it is, a lot of the times it's the opposite. And so Andy's got some very interesting stuff today to share with everybody. So should be a good webinar. Not that they aren't all good, but this one's going to be a little bit special.
Oh, well, thank you there, Jamie. Hope you're not blowing me up too much here.
No, I don't get really excited, Andy, but when you showed me what you had, I was like, this is interesting right here. A little bit off the beaten path.
Well, yeah, I think it's good, and we'll dive into that. That's going to be toward the end, and keep you guys hanging around. And then there will also, it's not much of an alert, but it's something that you can use. It's more has to do with how you can kind of use the columns to help you spot the opportunity in what I'm going to talk about. But let's get started. And before we do, let's talk about our disclaimer here, guys. We are here for educational purposes only, and to show you some really cool content, but we don't want you to construe anything that we say or anything that you see as investment advice. Okay, we do advise, if that's what you're looking for, to seek out an RIA or a registered broker. But we are here to have fun and to show you some really cool stuff. So let's talk more about what Trade Ideas is about. And although it's an incredible software, and that is what we showcase, we want you to know there's much more to it than that. And I actually stole Steve's slide here. I noticed you're not alone with Trade Ideas. Mine usually says something like incredible support and training, but it's all based around our concierge service, and we are very proud of it here at Trade Ideas, because trust me, you get this, and when you first get this software, it's really eye-opening. It's like, wow, what am I going to do with this? And we do not want you to be be taken back by the complicated software, because it's not that once you get to learn it, you're going to feel so user-friendly. And that's what we want to show you here. And that's why we have all these webinars during the week. That's why we opened up a Friday support session every Friday now from 11 to 2 Eastern time. And this is free for everybody, much like the trading rooms, where you can come in here and you can ask basic questions and see some elementary how-to steps in configuring these windows and layouts. And because we do not want you to be afraid of the software, because after about 2 weeks to a month with it, it can be a very powerful tool in your hands. And we also have a daily trading room, which you can go in there. Barry trades. He likes to trade probably the first hour or two in the morning, and he welcomes any questions that you may have, and not just for experienced traders, but also for newbies and beginners with the software. So a lot to do here, guys. And one other thing that I would be remiss if I didn't tell you about is our free 101 hour of power training that you get when you subscribe. And what this is, it's a sit-down session where we use a product called a Go-To Assist, where we can come in and look at your desktop and help you with your trade ideas. And for the most part, we let you control the mouse, but if you need us to come in and speed things up and show you some tricks here and there, we will do that. Just an incredible hour. I can't tell you, I don't want to brag, but I can't tell you how many people at the end of this hour, they just say, wow, man, this really did help, So take advantage of that. It's regular, and I get people that come back and back and back again for $99, because it's a huge help, because it's not only about the software. We're all professional traders, been doing it for a long time, so we can go down that mentoring, coaching aspect of trading. All right, so let's get going and talk about our agenda today. Okay, market recap. Wow, another doji. Okay, we're seeing a pattern here, and basically, well, I'll save it for the market recap. Then we're going to talk about, Jamie's going to talk about the Holly recap, and I threw 3 stocks in there of interest that I thought were really good Holly trades today in a market that was very difficult, back and forth action. Holly I was very impressed. Anytime you have a market like this as a trader, it's very hard to grind out a profit. And Holly has done it every day this week, and in pretty much the same market. Isn't that right, Jamie? I mean, she's been.
Yeah, the daily chart on the SPY and the Qs and that little range that we're constructing out of stickmen dojis. Yeah.
Yeah.
So it's just like, is this going to be the new norm going through the summer? And see, this is, of course, we never know exactly what's going to happen, but we can read beneath the lines, so to speak, or pull up the rug and try to make logical predictions as to market direction. And it's like the volcano example again. You study what's going on underneath, and that helps you predict. So I mean, looking at this little doji type range that we're putting in, I mean, it is the summer's upon us. So this could be a commonplace type of trading day that we saw here today, as we just kind of vacillate between highs and lows. And as long as we stay in between those lines, it's going to be like this. And of course, there's always a chance we might bust out and go higher or fold back over. But keeping in mind it's the summer, and most summers are pretty boring. Of course, a few summers ago we had some action. But hey, regardless, whether we stay in this little range that's developing or whether we bust out or break down, the bottom line is there's always opportunity.
Absolutely.
Matter of fact, when we're in a slow market like this, to me it appears that things go in slow motion. So I don't necessarily mind a market like we had today, because the plays were there. They're just kind of unfolding a bit slower when you take into consideration Holly. Well, all the trades that she made today, which were 15, were all long in a market that was kind of vacillating to the negative side most of the day.
Yeah,
of course, that's
very well.
Pretty cool with what you have to show us as well.
Oh, yeah, exactly. And then that's what we want you guys to understand is and trust me, because I've traded slow summers, back in the day where I didn't have anything like trade ideas to help me, to point me in the direction of what to trade, and when you're just trading basically the market and the major market stocks like your Apples and Intels, those things can get really choppy and very slow. That's why you need a product like Trade Ideas. So let's move forward here. Oh, and the last thing, that's my little topic today, trading gap ups, and which I think you guys are going to find interesting. I've done a lot of this, in my years of trading. A lot of people, that's what they want to focus on, what's called story stock, news stocks, stocks that are gapping up for a reason. And that's where, a lot of traders want to focus their attention on. So I have some really good tips on trading gap ups, and I got some some data to show you going so far over the last every day this week, and some interesting data on what the stocks are doing after they gap up, and I think you guys will find that appealing. So let's move forward. Let's back out of this, and let me pull up the spider so we can talk about that. So let me drag this down, and there's my little thing I'm going to share with you later. All right. And guys, what you have here, you have a market where you just have the, I forgot I moved my stuff around so I could be the same as you guys, and I can't get used to it. My daily's on the left side now. All right, so you have a market here. The last basically 4 days, it's much all been dojis. I guess this would be referred to as kind of almost like a shooting star, but nonetheless, you had a very small body with a wick to the upside, a little one to the downside. But these other 3 days are pretty much all dojis. So you have a market here that really is kind of at a standoff for the last 4 days. Basically, an even number of buyers and sellers. Now, boy, you cannot get much more even than that. And so what's going to happen, once again, much like we did back here, one can anticipate that, we may be correcting, over time versus over price. In other words, going sideways instead of pulling back. Pulling back a little, but not much. A pullback, a decent pullback would be to this breakout, and we're not seeing that. We're just going sideways here. So one can anticipate you know, the trend being your friend, and the next move could be higher, but I definitely would want to consider, you know, a confirmation of that, and obviously that would be a break above this 4-day high right here. Draw another horizontal line. We've been drawing them a lot lately. I guess we can put this in there right there. So that's what you're looking at. You can see we butted up against it now 3 times. So that's the level for any real conviction to more momentum to the upside. It is the path of least resistance. Let's not kid ourselves. I mean, you look at this market over the last so far this year, and it has just been kind of, you know, grinding higher. And of course, the Qs have been leading the way. I'm not going to spend a whole lot of time on this today because there's not much, you know, talk about. Qs tried to break out there a little bit, but that's interesting. I didn't even see that on the close there in the Qs compared to the spiders. They had a little more of a push there, but nonetheless, still kind of closed below this average. But you can see there just nothing. Nothing too much to elaborate on, Jamie, unless you have something. The diamonds with a big tail to the upside, but of course we always talk about them being antiquated because only 30 stocks make up that index, so I don't put a whole lot of focus on that. I usually do the spiders, and I'm not going to pull up the IWM, but the spiders and the Qs. Jamie, you have anything you want to add? Any insight that you might want to add to this? I think we just have a range here.
It's pretty simple. You know, we're just getting into this range. The summer's upon us. Unless we have some big macro events come out of left field, we probably will remain in the range and kind of peck highs from time to time. Maybe a slow grind. But the beautiful thing about it, Andy, is between the AI and the techniques that you're using and that I'm using, man, there's so many things out there. And so many, you know, on a day where there was the perception of selling for a large portion of the day, and your indice windows kind of pink to, you know, not quite green for most of the day. I mean, the plays that not only Holly was spitting out, but some of the things that we were seeing, where it's all about just knowing where to look, right? Using the hunting analogy, you know, if you're going to go hunting, you don't want to go where the, you know, where there's a gazillion hunters and very few, you know, very sparsely populated game. You want to go to the forest where there's a lot of game, and you're never going to be the only hunter there, but the fewer, the better, right? Just makes good common sense. And if we apply that same methodology to the markets, well, the results are pretty much the same.
Yep, absolutely. Well, Jamie, like I said, I don't think we've had this is our 4th webinar this week, and then we've had another doji and a spider, so that's probably enough in the overall market trend there. So if you want to take the wheel here, you can talk about Holly. Yeah, there's definitely some interesting plays in Holly today.
Right. It's like, okay, doji and doji and doji, and that's pretty much the market. Mm-hmm. All right, so let me flip it over here. You let me know when you have eyes on my desktop, and hopefully I've got my sizing right so everybody can see everything.
Yep, gotcha.
You got me? Okay.
Gotcha.
Very good. All right, ladies and gentlemen, so let's talk about what Holly did today. Now, on the strategy count, she showed up with 12 strategies in the hopper today. 4 of those were the shorts, and we can see none of those guys executed. None of the traps were sprung for the short strategies today. So all 15 trades that Holly generated came from the long strategies. Matter of fact, the only long strategy that did not fire was Sunrise Mover. All these guys, pretty good trade distribution too. 3s, 2s, and 1s. Always like to see a nice spread, not see one strategy, you know, going too active. So all in all, a very nice trade count. And when we take a peek at the P&L graph for Holly today and how things started out, we'll notice that today, slightly green. And when we're looking at these charts, you know, here's risk on and how it started and what the action looked like before the traction really caught. And here's the same chart for risk off. Now, I always like to point out that hopefully in the future we'll be able to make this a little bit larger and maybe even mark it up as well, just like a stock chart, because Holly is that surfer that's going to surf whether the waves are 1 foot or 10 feet, right? Now, by watching her do her thing in the first hour, 2 hours, we establish this little baseline, and then boom, just like a stock, just like a regular breakout, when the traction catches after seeing this little consolidation area, well then that typically lets us know how to temper our expectations or how aggressive to be. You know, should I be aggressive today? Everything that looks good fits my pattern, everything's good. Well, when you see Holly doing this early on, that's a pretty good indicator. It lets us know that the statistical probability is working today. There's not a lot of noise out there. So the traps have been set the night before and things are falling into the traps. Things are working. A lot of the times we'll see the P&L graph as she starts building her little intraday portfolio, maybe kind of flux between negative and positive, negative and positive. And those are the more iffier days. That's when the stat noise, the statistical noise is at higher levels. All right, so once again, Holly can show us the path, or she can act as the canary in the coal mine. So as you follow along with Holly, you premium subscribers, just keep in mind, try to read this as you would a regular stock chart. Now, let's talk about the action that Holly put out today. So 15 trades total, if you tally up this column. And of course, here are the individual trades. And what I've done is I've sorted by risk on here. Of course, that brings up the first stock, MNTA. Now this is like Groundhog Day, because how many times, for those of you who attend on the regulars here on our webinars, have seen this pattern emerge? Not only the pattern, but the reason that Holly is producing this play is because the statistical probability is there. Strong stock pulling back. That one came to the party today with expectations of 61.4% today. We can see it actually underperformed slightly. One of two, 50%. Of course, not to take anything away from these guys, they all overperformed. 62.5 versus 100 on 3. Slightly overperformed here. 2 for 2 and 2 for 2. Now, what's so beautiful about this trade, other than the fact that it just worked immediately, is when we see the buy signal come up here, we know right off the bat we've got great statistical probability. And of course, Andy, I know you know the answer to this question, but as soon as we pull this up, we notice that a range break could be imminent. Mm-hmm. Because the prior high was right there, if I draw a line. So this is what we call the second star. The first gold star about this trade was Holly was recommending it and says, hey, there's significant statistical probability behind it. Then it just happens to be right before one of my favorite patterns unfolds. So that's gold star number 2. So we could take a little bit with Holly right here. If it moves on up here and busts out of that range, that's always a good thing, especially if there's a little bit of extra volume behind it. And if there is that extra volume, now you've got what I like to call a 3-star setup, because a trade can work on any one of those variables alone: the pattern, the statistical probability. Volume doesn't always dictate that a stock's going to move, but it certainly increases the odds that river's raging instead of just trickling by. So if you jump in, chances are you'll get taken for a ride and not just sit there. So when we see like a triple star event like this unfold, it gives me great confidence in this play. So, you know, once again, the simplicity, statistical probability coupled with a simple range break chart pattern followed up with intense volume. So we know that there's no guarantee, but if, you know, that's like looking at the volcano and going, hey, there's smoke coming out of it, and little things are shooting out of it from time to time, and I've seen some lava running down the sides. Now, would you stick around? No, you'd probably not want to be anywhere in that area, because there's no guarantee, but you got a pretty good idea at what is going to take place. So, you know, as you spend more time with Holly, hopefully some of you out there are like, oh yeah, I was all over this one today. But the more time you spend in the chair, the more time you spend watching Holly, the more this will jump out at you. And of course, let's look at the dark shaded area here, because this is the dark shaded area. This is more light shaded. What does that mean? Well, that's all about risk off and risk on. And if we look at Holly, risk off, Holly takes a whopping 8 cents. She gets in the trade at 7:51 Pacific Standard Time and bails 10 minutes later. So the dark green is Holly during the time she was in the trade on risk off. Now, some of you have heard this before, but for the new people in the audience, why does Holly get out for 8 cents when, looking at a human perspective, there's really no stop loss down here? That is why we have stop losses, to let us know what is our risk in case we're wrong. So we need to let the stop loss do its work. And we can see never even really made a run at the stop loss. So why did Holly get out for 8 cents? Well, she has the right to get out on profit save, as we can see from the exit column right here. The reason was the profit save. Now, Holly's profit save functionality is more or less like a trailing stop. She's not the best at exits. Her strong suit is statistically weighted entries. So risk off is simply Holly exercising her profit save, her reduced risk, staying in the trade for the entire time, which would be a time stop, or of course the profit target could get hit or the stop loss could get hit, which would be noted here as well. So if we're in 100 shares or 200 shares with Holly here because we like it, and we also notice this range break, so we're like, yeah, I can easily do 200 shares, but I like this one a lot more because it's got a lot more positive factors other than statistical probability, so I'm going to pop into 400 shares here. Hey, we're in the money. Things are looking like they're working. Holly gets out. I don't see any reason to get out. Therefore, I will ignore Holly's advice, and I will go risk on this trade. I'll accept more risk. Maybe I'll tighten my stop. Maybe I'll leave the original stop loss. But by accepting more risk, you got paid a lot more than risk on or risk off version. Now, this is very simple. Let's not overcomplicate things. You really want to get into a good habit. In the beginning, get out of half with Holly. If the chart dictates it, keep the other half for risk on. Adjust your stop loss on the second lot to where you at least flat, so you make something on the trade on your first lot. It's more about, that's your trade management. That's your risk management, which is equally as important, because if we don't constantly protect our profits and adjust, well then things get tricky. Andy, anything to add to that MNTA trade?
No, it was a beautiful call. Look at the daily too. You had
Right. Well, I'm glad you said that, because tempering our expectations, we always like to know how much oomph might be in the upside here. We'd hate to get out early, right? Well, we pull up the daily, and of course we look to the left to figure out where it might bump its head. And the first, if we go all the way back to this wick on the 17th of February, that could be the upper extreme. And this little guy bumped right up to it, right? So earlier in the day, when we're getting the signal here and we see it busting above these previous little tops right here, as soon as it gets past this one right here, we could have easily made the assumption, well, we might go all the way to the top of that wick, and that's exactly how the trade played out. Yep. Sometimes Holly will pop us into a trade. There won't be anything over here to the left, because in addition to that probability being there and the trap being sprung, might be at lifetime highs. Mm-hmm. Nothing
like we always preach on here, once she broke out, if you go back to the daily of that little range going back to last month, remember how we say it's on a mission. Where it's this next mission, right at the top of that wick, going back to in February. That's exactly where it went to.
Yeah, Andy, hey, your volume went kind of wacky. Did something happen to your mic?
Oh, sorry, my mic was up above my head. Now that was probably why you were talking. Can you hear me now?
Yeah. Perfect.
Okay.
Perfect.
Yeah, I was
Okay.
taking a drink of soda pop and I pushed it above my head.
No
Sorry
worries.
about that, guys.
No worries. Moving right along here. So let's talk about a couple of other trade arounds or going risk off here.
And while he's doing that, what the blue line you're seeing, that is the Holly alert. Where he was drawing were those orange lines, that he was just showing you where the breakout was. That was just him just showing you the range of breakout on that last trade. So I just hope you understand that. Okay, you're
Right.
welcome.
I'm looking at the question too, trying to make sure I
Yep.
understand it. How did he choose the entry point? Okay, he's referring to the MNTA trade, correct?
Mm-hmm.
Okay.
Mm-hmm.
So I did not choose the entry point. The AI, if you note the blue box over here with the AI, right? When I double click from Holly's blotter, these are automatically posted to my chart. So we have stop loss down here, the entry price, which corresponds with the blue arrow in the respective 5-minute bar that you're looking at here. And this was the profit target up here. So green's profit target, this is where the stock currently is, AI entry signal, and stop loss. When we were looking at the daily, I was just showing you, looking to the left here, where we were in relation to this range being broken here, and then magically how the stock stopped when it corresponded with this wick back on the 21st. So I hope that makes sense.
Mm-hmm.
Alrighty, so let's take a look at ASB real quick. You can see the same metrics populate over here, and that's what we're trying to do, ladies and gents, is make it real easy so that all this chart reading becomes a little bit more simplistic. Because if all these interesting lines are already posted here for you, all you have to do is go yes or no, right? Makes things a lot simpler. Once again, it's kind of the Google Maps when you're driving. Who could live without them now? Well, we're trying to create the same thing, doing a pretty good job at it with the trading world by immediately putting these markers up here for you. Therefore, you can react more quickly and more efficiently, scan through a bunch, many more symbols than you normally could. All right, so once again, we kind of see the same thing here. We had the run up initially, takes a little breather right here. We get the entry call from Holly right here. This one kind of percolates a little bit sideways, but you could always start drawing some of these horizontal lines and going, okay, we got it. It was already kind of range bound. Nice and smooth, percolates under the surface right here, and then pops through again. So whether this pattern right here is being displayed at the beginning of the trade or later in the trade, it's still a really good time to add to a currently winning position, which a lot of the times is one of the more difficult things for especially a new trader to get in the hang of, right? Adding to a winner, it's a kind of a foreign concept at first, but if you can identify the that I saw in the market today. All right, so let's do one more of these. And once again, Holly only takes 11 cents on this trade because she got a little fidgety, didn't want to let her winner turn into a loser. But we can see right here we had a max of 40 and a max of, if you note this little column right here, max profit, which tells us she made 13 cents, but the maximum was 40 cents. So it's always, the game I like to play when I'm interacting with Holly is, okay, we're going to have the risk off and we're going to have the risk on, and there's typically always going to be a spread in there. So every once in a while, maybe you do get lucky and you top one right out at the top on risk on. It's just like selling the top or buying the bottom. As traders, we get lucky and that happens sometimes, but we're usually missing the bottom by X amount. We're usually missing the top by X amount. But what you should focus on here is trying to arrive somewhere in between risk off and risk on your plays. And if you can start identifying the second opportunities to leverage your position, well, then you can really multiply the alpha factor by sizing up when it's appropriate. All right, so the last one here we'll take a look at a little bit later on in the day. You know, we can see this little guy right here, and this is more of an interesting little chain of events that unfolded once Holly called the signal, which at the bottom of that wick was a pretty good entry. And you can see we were out of the money for a little while here, but guess what? Stop loss does its job. It encroached on about half of the way through that stop loss before it turned and came back up and pushed. And a lot of the times we'll see Holly plays that will vacillate around the entry line. They'll hug it for a while. Maybe they'll pass back and forth through it 2-3 times. But you know what you'll get into the habit of doing is going, well, it made about halfway down. Now it's hugging the line again. So at some point in time, if it keeps hugging that line, sometimes it takes a couple of pops before it catches traction. So if we see a little surface or a little area like this develop, we can play the same game by just trying to carve out some little channels there, like so, and going, okay, we're in it, we're out of the money, now we're hugging, now it's popping back up, getting through these little wicks right here, and then we can see it got a second wind moving towards the close there. But if there is a buyer in a stock, they have to come out at some point. It's going to ebb and flow as it does it. But clearly, there were more buyers in this stock today than sellers, and the buyer came back out towards the close. So once again, Holly getting out, not wanting her winner, not wanting to give up the coins that she had made already, but we got 13 and 31. So we still have about, what, 18 cents in there up for grabs? Mm-hmm. And depending on your commission schedule, ladies and gents, I'm sure there are some of you out there paying $5 a turn. There's probably some of you guys out there paying, you know, 50 cents a turn or $1 a turn. But, you know, when we're looking at these amounts that are being made, even these smaller amounts, they're really nothing to sneeze at, right? Because if you're on the right commission schedule, all you got to do is make a couple of pennies to be slightly profitable. So when you think about it from a per share traded type of mentality, you know, you make, depending on your commission structures, what's going to dictate what your break even is. So just something to think about moving forward. Other than that, that's pretty much the trade around opportunities and the risk on, risk off examples that we can use today. When we look at the losers, you know, 20-cent loser would have turned into a 42-cent loser. 4-cent loser would have evolved into a 23-cent loser. So look like the stop losses were doing their job on those stocks. You know, Holly does have losers. She'll even lose on a day. She's just been on a pretty good winning streak as of late. And if this market right here continues along this little, you know, doji type of environment, hey, it's all fine and good, because if we get 4 or 5 more days of this, the AI has a lot more information to work with. And, you know, I think more and more good days are in store if we stay in this tight little range from an AI perspective. So we'll have to see what unfolds. Yeah, well, Andy, unless you have anything to add about the Holly action, then I'll kick it back.
No, yeah, kick it back over here to me.
Check out that content that you got for us here. Give me 1 second here.
No problem.
All right, there you go.
Got it. All right, so Bill is asking about NITT wake-up call. Looks like it was a risk-off winner of 25 cents. That's the daily, so just take a look at here. And this is the entry. Kind of a little bit thin. I mean, it did trade almost 200,000, so not too bad. The chart makes it look a little bit thin, but you can see this is our entry right here at, and I forgot to pull up my developmental version, guys, so I'm sorry. I pulled up the wrong one this morning, but so you're not seeing the lines, but you can see here 845 was her entry, okay? And what she did, she exited this trade at exit price on a time stop at 870. So it looks like this was probably a short time stop and probably got out at the pretty much the top right here. So that was her getting out at pretty much max profit. So a decent trade there, and that INTT.
Right. Sorry, Bill. I blanked out on that one. I was going to cover it, but as you can see, yeah, a more thinly traded stock. But sometimes when the volume's there, depending on how many shares you trade, sometimes there's liquidity in the thinner ones.
Mm-hmm. And real quickly, this RTEC wasn't a bad one either. I mean, it was only a 10-cent risk on with a 25-cent, risk off trade, but it was no pain. This was a nickel back. Stock pulls back in nickel, and she ended the trade right here at 26.85. And it was, what I like about it was there was no pain. It just went straight up from there. Even though it wasn't a huge gainer. But anyway, let's pull up here and take a look at what I have for you today. And the reason I want to really talk about this subject is I know a lot of people like to trade gaps. They like to play stocks, like I said, that are in the news, that have a story behind them, which is good. There's nothing wrong with that. But you have to understand, what you're dealing with. First of all, a lot of people like to play these. A lot of traders like to play these. Most of them like to trade to the long side. So what you have as a phenomenon is you basically have traders who really push these things up in pre-market. And you get big gaps in pre-market, even though in most cases they're not warranted. So I mean, and it's easy for a trader, especially new traders, to get all excited. Stock, great news. This stock is gapping up, man. I'm gonna jump on this, and I see so many people jumping on this stuff way too early in the morning, or even jumping on it at all. I can show you many examples today alone, but that's not really what I want you to pretend. I'm going to show you some data today. I went back and did some numbers this week, going back Monday, Tuesday, Wednesday, and Thursday on all stocks that gapped up over 4%. And this is example from this morning. This is pre-market at 8 o'clock in the morning, and pretty much, let me show you the filters real quick. So we have the configuration, very simple. Price $1 to $500, has to have a minimum gap of 4%. Average daily volume of 200,000. And that's all there is to this alert. So you have stocks. This is the gap this morning. You have this one right here, DRWI, gapping up 26%. INSG 21%. So some really big gaps. I have a minimum of 4%, just to kind of prove my point today. So what I did is I went back and I looked at these gaps and studied them, how they, sorry, I don't want to configure, I want time frame. What happened during the first part of the day? So if I go in here, put 9 o'clock a.m., and this is today, so we go, okay, this is 9 o'clock a.m., and let's take a look, at what we happen here. Well, you see a lot of those gappers that you see up or big early in the morning. What happened to that DWRI, that was gapping up like, gosh, what happened to it? Is it even on there anymore? You see it, Jamie? There it is, very bottom.
Yeah.
Yeah, I'm sorry, DRWI, yeah. So this was like, what, 26, I think, %? Now it's up change. We're looking at change from the open. That's the key, not change from the close, okay? Because these stocks are opening up at a certain level, and unless you come in owning the stock, you're playing them from change from the open, not from the close. So I wanted to do a study to see, after 30 minutes of trading, what percentage of these stocks are up higher than where they open versus lower than where they open. And I think you're going to be surprised at what I found out. And I'm just going to go ahead and pull over my little Word doc that I created for you. I wasn't motivated enough to put this in a spreadsheet and all that. But minimum gap up 4% or greater. I'm studying the change from the open percentage. And this is 30 minutes after the open. And I went back and I did every stock for Monday. And 30 minutes after the open, you had 8 stocks. So you had 20 stocks that were gapping up 4% or better. After 30 minutes of the open, you had an average of 8 stocks. You had 8 stocks that were gapping up an average of 2.11% from the open. I shouldn't say gapping up. They were 2.11% higher than the open. You had 12 stocks, okay, that were down 3.37% from their open. Okay. I went to Tuesday. You can see the work here. 5 stocks with an average percent up of 2.92 from where they open. You had 15 stocks from where they opened that were down 3.3.
So Andy, just to clarify, there were 20 stocks that gapped up 4% or higher,
Right.
and after the first 30 minutes, 5 of them were up almost 3%, and 15 of the 20 were down over 3%.
Oh, yeah, down 3.3%.
Yeah, okay.
Exactly.
Here I understood, okay.
Yep, exactly. Wednesday, same thing. Okay, you had a total of 12 stocks gapping up over 4%. Of those 12, you had a little more that were gapping, that were higher than where they opened, but only on average 1.8. Look at the 5 stocks that were down. Their average was 3.76. Look at today, Thursday. 23 stocks gapping up over 4%. Of those 23, 7 stocks were up average 4.5% from their open, and you had 16 stocks almost down over 6% from their open. So I just wanted to, and the reason I kind of like to pick this week, I was kind of waiting for a week where we were kind of going sideways. There was no kind of directional bias in the market. We've been basically just kind of going sideways all week this week, putting in a doji every week. So there was no market influence, you know, in these stocks that are gapping up. And then for grins, I wanted to put in the close today here, just so you guys would see it's just kind of not an anomaly after the first 30 minutes. So I took these Thursday stocks and I took them all the way to the close. And now you had 6 stocks that actually closed higher than they opened by an average of 4.73%, but 17 stocks closed on average 7% lower than where they opened. So I think you see a trend here happen pretty much every day. Except for this day, you had more stocks that were trading lower than the open, and in a pretty good margin above the amount they were up on the close on average. So where am I getting with all this? Where I'm getting is guys, I've seen people who trade gaps really well, and I'm going to tell you, most of them trade them to the short side, because you have to remember the majority of us, they like to go long. And you also have to remember that this markets have a way of, you know, fooling the most of us, most of the time, you say, you know, and there's a reason for that. You have the majority of people who are looking at these gaps and wanting to go long. They're buying right at the open, and they're getting, you know, their head handed to them. And it's not always the case. There's some stocks that obviously gap up and take off and do very well. That's why I think it's important that you put a little bit of fundamental homework in this when you're playing the gap ups. You can't just, you can just trade the technicals, but you can. But I think it really helps you if you're going to focus on trading gaps to have knowledge of the news, okay? Just to know whether the news can be substantiated. I mean, it's something that it can really cause the percentage of increase in the gap that you're seeing, because a lot of times, you know, when I'm trading, and I used to short a lot of biotechs, you know, and I'd see a biotech come out and I'd read the news clipping on it's a phase 1 story and the thing's gapping up 10%, you know, and I'm thinking, wait a minute, you know, this, you know, so I'm not saying trade on fundamentals, but you can be aware of them. But you know, if you're going to trade gaps, you really need to have an idea of what's going on. Take, for example, Nordstrom's today. Nordstrom's today had a gap up of like, gosh, I want to say like 14 or 15%, which is huge for a $47 stock. And it was based on they are entertaining the idea of maybe looking for going private. So it's not like there was a suitor out there that was already looking at them, looking to buy them. They're just entertaining the idea of going private, which basically to me just says that they can't make money anymore, so they want to try to find somebody who can. But that's a good example where you can be aware of the news and you see a big gap up in Nordstrom today, you know, kind of still, you know, in a downtrend and gapping up. And I'm not saying just immediately jump on it short, but you know, you can watch, even if you watch the first 30 minutes of action, and like Jamie's talking about looking for range breakouts, well, you can also have range breakdowns. This is an example of a nice little range breakdown this morning. You can see right here, maybe shot up briefly. I can't tell. You probably did real briefly and came back down. Okay, then it put in a range. Well, you can see right here, put in a well-developed range, and then once it breaks down below that level, you're thinking short. And you have a nice little drop there from basically 46, all the way down $1.50 there, basically in 30 minutes. So, and that's what I want to let you guys know. I want you not to always, I mean, I'm not trying to, if you don't like to short, that's fine. This doesn't have to be your game. It doesn't have to be your niche. But I think if you're going to play gaps, first of all, if you're playing them to the long side, I think you need to be very, very careful and prudent about, when you're entering a trade. Make sure, it's technically valid and not just fundamentally, not because you come in with opinion that this is great. Nordstrom's going to get bought out. They're going private. I'm going to go in there and buy it. No, don't do that. I mean, not to say that it couldn't gap up and go higher, but, be patient, and wait. It's almost like trust and verify. Okay, you can trust your opinion. You may have an opinion about what a stock's going to do, but you need to let it be verified, okay? And there's nothing wrong with forming opinions until you start acting on those opinions, without technical reasoning and logic behind you. And that's some of the very best traders I know, and there's a few of them out there that are very, very good short traders, and that's what they do. They look for these stocks that are gapping up on what they call crap news, or news that just doesn't warrant the kind of gap they're seeing. So I think this speaks volumes. I think just running this thing that I did this morning, because in general a lot of people think gap and goes. Well, in most cases, I think, and do your own homework. This is something you can do on your own. Just go back and check out. Maybe this week's an anomaly. Maybe next week these are reversed. But I think you're going to find that you're going to, especially in some of these small cap stocks with a lot of debt, you're going to see a lot more gap and crappers, than you're going to see a lot of gap and goers. And I just see so many people getting blown up, trying to chase these gaps in the morning, especially on these low price stocks, when I think the most opportunity is to the downside. So anyway, let me give you some final tips here just about trading gaps, okay, like I said, know the news. Okay, if you're trading gaps, kind of have some sort of knowledge about, why is it gapping up. And it's okay to have opinions. It's totally okay until you let those opinions, affect, the way you're trading without letting it be technically verified. So, in other words, it's okay to come in with opinions all you want, but do not act upon them unless the chart is telling you to. Okay, and that's my second point too. I mean, I've already talked about shorting can be very, very profitable. Some of your moves can just be so huge, on the downside. We'll just take a look at some of these, how they closed today. Let me go to my time frame and go to historical date and just put in 3 p.m. today. And this is just an example, but you had some, look at this DRWI that gapped up 26% and ended up finishing down 20% from where it opened. So a good opportunity there. I mean, I know it's probably a very thin stock and probably low float, but you can see here this was kind of a $1 stock, kind of anomaly there, which really helped the close today because everything else was right around 3%, 2%. But look at some of these others: 7%, 9%, 19%, 20%. And I haven't gone in there and looked to see if these were even tradable. That's not my point. My point is you can make a lot more if you're right on the short side versus being right on the long side. But I'm not trying to twist your arm into trading that way.
Well, Andy, too, we all know that the stocks go down in an elevator where it takes, they go up on a staircase. So, there is a certain to the short side. I mean, Lord knows back in the last big run up in the early 2000s, 99, 98, when the market was going up, we made a lot of our money short, and, there's just always good short money in there if you know where to look.
Yeah. And I've done this, and but it's not I'd rather play to the long side. I mean, most of us are that way, but I think it's good, especially guys, if we do get in a bear market, to to have it as part of your arsenal to be able to short, because you can really make a lot of profits if you have that like I said, as part of your repertoire. Another point there is, don't get caught up in the hype. It's very easy to get caught up in the hype. Just sit back, try to be calm, let the charts dictate and tell you what to do, because you find yourself getting caught up in the hype, and that's when you kind of create these opinions and you act upon them foolishly before you get confirmation in the chart. And most importantly, guys, take a look at the daily chart. Where are stocks opening up? Is it opening up out of a range? Is it opening up is it in a downtrend? Gosh, that's know where the levels of support and resistance are, because that can tell you tons of information. It's kind of like I hate to keep going back to JWM, but it was just when I was looking at today, and you look at this daily, and that's a pretty ugly daily chart. I mean, you can see right there, it tried to gap up to its downward sloping trend line, and that's pretty much where it opened. But the sector, just apply some common logic. The sector has just been horrible. You got Macy's that just death rolling over on a death march. And when you see something like this, gapping up on that kind of news, boy, just that's an opportunity. That's a really good opportunity to put a short play on. But look at the daily charts. Know where your trend lines are. Know where your support and resistance are, because it's so much different, chasing a long on a gap up when it's breaking out, and looking left and nothing there, versus chasing some long that's opening up in the middle of a sloppy range. It's on a downtrend. So definitely keep an idea of where the where the charts are, or where the stock is on its charts. But anyway, I just wanted to share that information with you, because I know a lot of people that they really like to chase these news stories, and especially those biotechs, and there can be some great opportunity when you look at the news and do a little homework and learn to play the other way instead of long all the time, because there can be some great shorting opportunities on these gappers. But I think that's about wraps it up, guys. If you have a couple of more questions, we're about out of time. Going to have Scott come in here in just a second. But if you have any questions on what I just talked about, or maybe anything that you would want to ask us to take a look at a chart or two real quick, we would be happy to do that. But otherwise, I would just have Scotty to come in here. You got anything you want to add, Jamie, to what I just talked about, or anything else?
No, that's really good stuff, because once again, it goes against what most people would think initially, okay? Hey, we're in an up market, things are gapping up, but, more times than not, do they just come right back? And what you showed us today gives us that peek under the rug, It's like seeing an ultraviolet. Well, we didn't have a pair of glasses that allowed us to see an ultraviolet. We put on that pair of glasses, and we can see this different subset of information that, you know what, a lot of people aren't even aware that subset of information even exists. More importantly, they're not even, much less are they analyzing it and coming up with very interesting data like that. It's really good stuff.
Thank you, Jamie. Thank you. Yes, somebody's asking about box. This was an interesting. This play was actually coming across my pullback above 50 SMA Pro today. But what happened is it got too far away from its low in the 5-day. So nonetheless, you had a stock that gapped up, and I think that may have been earnings, I'm not sure, but then has sold off for 4 days and now put in a nice reversal candle. So it still hasn't had a bar reversal from this. I'm not sure what happened after that gap up, but it sold off. So yeah, I think a move above this 2-day high right here could be interesting in that box for sure. It held the breakout level from from this range, and so yeah, I think that could be interesting there for sure. And real quickly, somebody asking, I have Holly trade stock. No, that's not the way Holly works. So you can't like give her a stock, and she is equipped with these strategies, okay? And what she does is she spits out these ideas based on the strategies that she optimizes and maximizes the night before. So it's not giving her a stock and letting her work magic with it. It's giving her a strategy and letting her introduce the ideas.
Right, right. She, when we create those strategies and give them to Holly to work with, that's just an event, right? So anytime that event takes place, we want to find the stock that's exhibiting the event. That's the way the system works, not the other way around.
Mm-hmm. Real quickly, one other here, SPWH, John wants to hear about. I was kind of getting exciting about it today because it had 4 days of pullback and put in a bar reversal today, and I thought that was kind of interesting there, and I'd like to have seen more or close near the higher there, but nonetheless, she's holding this level down here. This is a crucial level. I'd like to see it. I'd like to see that hold. So far, for 3 days now, it couldn't get down to that level, so it might want to go and tickle that level right there, but that's an area that we would, really like to see hold right there in that SPWH for sure. All right. Well, that's about it, guys. Thank you so much. I'm going to bring Scott in here now. I think he may have a discount for you. So, and a few other things that he would like to talk about. If I could find my, there we go. All right, Scotty, you want to come in here and roll us out of here?
Sure. Thank you. Yeah. If you are an Interactive Brokerage customer, you're going to want to check out the new beta. Get one of the new builds at trade-ideas.com/beta and hook your Interactive Brokerage account up to our Brokerage Plus module. And with that, you can auto trade ideas strategies, or either black box or gray box, all kinds of neat stuff. So get that, and then email info@trade-ideas.com when you need help setting it up. We also have some videos about it on YouTube, so go to our YouTube channel and search for Interactive Brokerage or Brokerage Plus, and you will find those items. We have a new podcast, and there's a new episode coming out tomorrow after the close. Do stay tuned for that, and if you're not yet a subscriber, go ahead and search for Trade Ideas Podcast in your favorite app that you use to listen to podcasts. You'll find it. Just subscribe. You get the new episodes. Listen to last week's while you wait. It was a really good one. We had a special guest trader interviewed from Dublin, Ireland, and it's a really good one. Got lots of great response. We have a discount code for you also, and you can download our handout in the handouts panel. Just find where it says handouts, and you go to webinar interface and expand it. Click the little link there to download it. And it's June Boom. It's all caps, just like you see it on your screen or on the handout. And that's good for 15% off either your first month or year of Trade Ideas. You can use that for standard and premium. And do remember that even the entry-level $99 a month standard comes with a full hour of training with Jamie or Andy or Steve. So take advantage of that. Once you become a subscriber, go to support and click on training and schedule your training session. Although we do suggest you spend a week or two going to the trading room, attending our webinars, and also watching all the Getting Started videos on our YouTube channel before you actually go to your training session, so that you can make the most out of it and organize your questions. Thanks everyone for attending. You can email info@trade-ideas.com with any questions. You can follow Steve Gomez on Twitter at TodayTrader, Jamie Hodge is @QuantBot. Also Trade Ideas 1 and Trade Ideas on Twitter. Facebook.com/TradeIdeasPro is the location of our Facebook page, and then when you follow us on there, you'll be able to share some unique content we post there with your friends. info@TradeIdeas.com is the support email, and our phone number is for billing and account questions. Thanks all. There'll be a recording up later tonight. Do remember to attend if you have any questions. Come to the Friday support session tomorrow. It starts at 11 a.m. Eastern and goes for 3 hours, and that's an open forum, so you can just pop in there anytime it's open and submit your questions, and whoever is on deck there will help you out. I believe it's going to be Steve and Andy and Jamie. I'm not sure if it's going to be all three of you all, but
we will all be in there.
Great. So yeah, stay tuned for that invitation. You'll get an invitation probably in about 20 minutes in your email. I think it goes out at 3:20 or 3:30 Pacific. So just sign up and you get a reminder tomorrow, and we'll see you there. Thanks, guys.
All right. Thanks, Scott. Hey, thanks, everybody.